All right, so let's see something. This is what my trade was, because pretty much on the hourly, let's see, on the hourly chart, well, I saw, let's see, let's align this real quick. So on the higher time frame, well, I was looking on the 6 hour time frame. Or I guess I can't go to it, so I'll just go to the 4 hour. So on the 4 hour, look at this low, which pretty much creates this fair value gap. Wait, yeah, it was this low. No, it wasn't. I mean, it wasn't an SMT fill technically, but we had this. Oh, that's why. We had this large. Here. Sorry, I was using my keyboard, but I couldn't use it. So this low, which was yesterday's low, it was swept by gold, but then silver failed to sweep it in the AM session. So I was like, well, this would make sense for longs because we have our daily open, right? And we didn't manipulate any level on either assets, and we traded higher. So we'd want to manipulate some sort of daily open, right? Which we do on both assets. We manipulate, oh wait, I guess technically not. That's what the manipulation is right here. We fail to sweep the low pretty much. So just, I'm talking too much about that, but that's the main idea, is just we swept the current day's low. And so I went on down to the hourly chart and I noticed, which was it? Technically I noticed this hour and I started to look, because after this is a C2, right? We closed back within the range. So I could look for the next candle to do this. Wait. Where the heck? You could look for this candle to do that and then go higher into the fair value gap, but it didn't, right? We kind of stalled around for a little bit before trading higher, which is fine, that happens. Let's see. Yeah, so then what I looked at is on the 5-minute chart, I pretty much was looking, let's say from around here, I started to look for longs, but there wasn't anything, right? This was my initial kind of barrier for entry, right? If we CSD this, because initially over here, within here, there was an SMT, but this SMT, especially when they're this low time frame and there's kind of like low intra range, I'd say, it's not as high probability. Sorry, wait. It's not as high probability. And as you can see, we didn't even make the change state delivery, and at this time silver was really bearish. So we ran this low, and when we were running this low, I was looking for if gold was running the low too, because if gold is running the low, then we kind of, the idea is not as much valid. But here, gold, as you can tell, it does not run this low, and we're actually pretty far away from it. If we look at the wick, we don't even touch into the wick, which that's like some more ICT stuff, but I still use that generally. And so pretty much on this wick, I was like, anything will get me in now, because that's obviously, or because it's obviously pretty bullish. Wait. So this was what my trade was. So as you can see, well, technically it was like this. So I created the idea that we have this two-stage SMT. Price should at least fill this fair value gap real quickly. Why should it fill that fair value gap? Well, look, if price is going to go lower, we need to create a swing point to go lower. So either one of the assets, silver or gold, is going to trade into this fair value gap to trade lower. That's if we're going lower. Now, if we're going higher, well, obviously we're just going to blast right through it. So any idea both mitigate this fair value gap. So that's why that was a really high draw for me. Now if we go back, I don't know why I keep doing this, but at this time, let's see, brother not locked. Bro, I don't know what's happening. We'll just use this chart. Don't look at the silver chart for now, but we create the SMT right here because on this candle, silver runs the low. And so I'm looking for immediate reversal. And look what opens up here. Right here. What is this candle? This might be a longer lesson, but just tell me what this 1 minute or this 3 minute candle is right here. The same thing on the 5 minute. What is this 5 minute? It's the new hourly open. So my previous idea of price going higher on that hour did not work. Remember from the beginning of this video? So this new hourly open should be an opportunity for me to go long. So any move lower on the 3 minute or 5 minute, you can wait for a change in state of delivery and then enter that trade to go long. That's pretty much like GXT in my eyes. That's what GXT is. So here we are on that 3 minute, because that was what I was, because look, little thing on the 5 minute, look how high up for 5 minute you would have to wait until here to get in on the change state delivery. So that's when you can, and that's when it's appropriate to drop down to a 3 minute, because you have a new change state delivery you can trade. And so I'm glad I didn't get in here on this open, but you can. All right, that's pretty it's pretty valid. I mean, on the close, but the risk to reward is pretty bad. And I was actually just in the bathroom, so then I took the entry into this fair value gap, and then you can start sort of like create this as your new low, or somewhere just in the middle. You don't have to have it all the way down here, because inside the fair value gap, when price comes down, it creates that swing low. So let's say that's where I entered. Yeah, it was pretty similar to that. Wait, let's go. So this was pretty much my entry. I think my stop loss was a little bit lower, but I ripped that with 7, so we gotta add 5 to that. So this is what my trade was pretty much, and then you can sort of start to scroll out and see, oh, where was my take profits? Oh, it was at this hourly, and that's how it went, right? But in reality, I did. Well, let's show you what it kind of looked like managing the trade, because that's an important aspect people don't talk about enough. Is managing the trades a lot hard, is like really hard. So we're going to 3 minutes so we can see that CISD. Price comes down, and it was actually in here that I entered, but that's fine. Well, okay, yeah. So we'll say there I entered. Bro, I'm gonna curse. So let's say that's where I got in, because I remember coming back and seeing this deep retracement and being, that's the buy, because you're still running off that 5 minute. New 5 minute candle opens up there. So this was the trade. This is when it's really good, because you can put your stop loss below, kind of just like in this range. And then once we TP here, or once we CISD here, you can move on. But this is the trade, right? Let's say that's the trade. I say let's say that because when price moved up here and we started coming this range, I just sold 4, which was kind of a selfish move, but I sold 4. And then I put my stop loss to break even, because I didn't want to assume any more risk on what I thought was pretty much simple, that if price is due to expand in this hourly candle, we should just expand. That's usually what the expansion candles look like. So a pullback into here wouldn't really advance this expansion. It wouldn't be good, but the idea is kind of invalid, because a lot of these expansions, you do get those pullbacks, and we're just so volatile that we can make the moves. So it's just kind of something that even I'm learning still. So I was here, and then it taps me out, and then it runs right to my initial hourly target right here. So that was pretty good.